Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your financial market wrap-up for April 11th, 2018. This is Wednesday, and we're about 4:40 p.m. Central Daylight Time. So the day was full of Mark Zuckerberg, obviously talking on Capitol Hill. I don't hear him saying anything today different than he said yesterday. So why 2 days? It's just because we have two parts of Congress, the House and the Senate, and they both wanted to speak to him. Okay. What comes out of it? Couldn't begin to tell you, but, you know, since he began speaking yesterday, the stock in that market has gone up. In other words, his stock. So that's good. He handled himself well. Okay, now let's get to the real meat. You know, the president did something that I'm surprised he did. When he campaigned, he said, you never tell your enemies when you're going to attack and what you do. So yesterday, of course, he comes out and he says 48 hours, within 24 to 48 hours, the U.S. is going to attack Syria. As I understand it, now Russian boats have left safe refuge there and gone back to sea. They have said, via words today, that if we shoot, they're shooting back. Air defense missile systems from Syria, obviously Russia defense missiles. And now Iran wants to join into the parade. So if the Iranians come in, maybe the Saudis come in. Who knows where this whole mess ends up? But it's very dangerous going home at night with positions because you simply don't know what to expect. I was on Fox Business this afternoon talking about that. And as we're up in the crude, which is getting a bid because nobody knows what to expect, even though Syria's not important to crude, you still worry about it. So they're putting a bid in this. I think that this is a fake bid. In other words, the market's getting ahead of itself on that. The gold market went up to $13.60 on a close, got higher than that. It actually, the last trades of the day were $13.54. But you can be up $25, $30 in these markets or down that amount just off a whim, the first missile you hear. And what if it turns into something beyond what we did last time when we attacked and we get fired back on? God forbid a Navy ship gets hit. This whole thing can get crazy real fast. That is what the world is worrying about. So it doesn't matter what happened in one way with Mark Zuckerberg today. Michael Cohen's out of it. Trade wars. Did you even hear a word about it? You didn't. When we come to the S&P 500, the short term has got an up thrust. But more important, the market is sitting under the 18-week moving average of closes, which gives the whole market a bearish bias. I was asked today on Fox, it was 2:05, what I thought. And I said, I wouldn't go home long stocks. I think nobody's saying that this could be bearish, the stock market right now, the Syrian situation. And with that, yeah, you ended up good and lower if you take a look at what occurred. Remember, you trade until 4. The last trades in the stock market were at 3. Futures trade an hour later. You can see how the market is just narrowing itself in. Now we're getting inside days upon inside days in this market. You had one there, then you came out of it, another one here. Is it a continuation going to go up, or is it going to come back down? Anybody's guess. When I look at the swing line, I can argue that the market has a pattern of higher lows. I can now argue that you also have lower highs. In other words, you're coming down here, you're rising at the bottom. Where does the market sit in relation to 18-day average of closes? And if you follow me, you know that I teach that the 18-day average of closes should be looked at as the line in the sand. It is the number that the market often goes to as it's trying to either break out to the upside or resume a downtrend. It becomes the resistance. If it can get over it, like it did here, then you get a running pattern. You've got to wait and see what this is going to do. Right now, in order to confirm a downtrend, even with the bias down, the swing lines up, you'd have to take out 1584.50. Did I say 1525.84.50? I'm sorry, I said that wrong. What else would happen at that point? You'd get nervous because then you're under the 200-day moving average, and you'll hear traders say they don't want to be under that average, especially at the end of a week. It would be an ugly scene going into a Thursday. So warning you about that. Let's assume if you did that, where could the next support level come in? It would be at 25.53 roughly, the lower Bollinger Band. Markets if you're not a technician. Market technicians use Bollinger Bands to give them an idea of support and resistance because the markets will trade within them 95% of the time. It's an algorithm designed to do that. What if the market moves out? If you take out 26.66 yesterday's high, then you're looking at the 2,700 level on the 100-day average. If you clear that, you're looking all the way up there. So there's a lot to be looked at. I'm going to call the market going home tonight about as neutral as you can call it. Momentum up, bias down, the swing line up. Pretty crazy. And yes, you won't have any control if the missiles go off. It's just going to do what it's going to do at that moment. Where did we stop in the NASDAQ? If you were looking at what I've said over the past 2 days, I said that I think that you're going to see strong resistance come in at the 18-day and the 100-day average of closes. At this point, the swing line is up, bias is up, but momentum is up and the bias down because you're under the 18-day average. We have to see what the market does if it can get up to that number. The combination going home last night was 66.64, 66.72. Today you rallied right up, went right to those numbers. You take a look at that, you can see what's going on, and then you started your back off in the trade. Okay, again, a pretty crazy situation. What about the Dow? Hanging in now for 4 days in a row at that 18-day average. The market has the pattern of higher lows, but yes, higher lows, and now it's starting to develop lower highs, closing under the 18-day average. I can't be any clearer than I'm saying. The markets are sitting right now like on a barometer. They're waiting to move one way or the other, and the question is, what's going to set it off? A market that acted well with everything else acting poorly and threw out another buy signal was the Russell. Higher lows, higher highs, closed over both numbers. So unless it gets back under 1502.50, the next upside target's the upper Bollinger Band, currently around the 1593 zone. In the VIX, look at the 18-day average. Look at how the market's setting in to these Bollinger Bands. Now, momentum is pointing down. The trend is down. Lower highs, lower lows under the 18-day average. If the VIX is going to go down, typically stocks are going up. Remember, this is the volatility index. So you'd be looking potentially in the 1630 to 1550 range if the market continues down. It all gets blown out of the water, and this turns into an uptrend if you don't take out 1857 and you were to get up over this high right here, specifically of 2312. Then the market can take off. So that's how I think the pros are looking at these markets. In the bonds and notes, you would expect the traders are scared to sell them today. Why? Well, safe haven. You just don't know what to expect. If you read the Fed minutes today, they came out hawkish, plain out hawkish. Yes, the Fed may let inflation gather a bit more steam, but if you read the notes, and they'll be in my reports tonight, and I've got all the notes laid out for you, they definitely sounded hawkish, yet the market's up 6. I would attribute that to one thing, not the Fed, the fear of what's going to happen in Syria. If we now take a look at this, here's how a one-year note was looking. Lower highs, and let me take this off. Lower low, lower low, lower highs. This was yesterday. Now let me show you how you can change that. If you don't take out 120.16, the market comes down. The low today's 120.21 Yesterday's low is 120.22. So you have what's called an outside day up. It means the market took out both the low and high of Tuesday. Unless you immediately take out that low, be it on Thursday or Friday, you've actually got a pattern now of higher lows, and if we look at that high, a higher high. So while I left that there, I wanted you to see how it works. At the same time, momentum's pointing down. Very difficult market. Trying to catch any of this, you're just waiting for somebody to hit a missile. It goes off. That's not the worst thing in the world. Let's assume they go off, and there's no real retaliation. U.S. ships pick up, go away. We bombed, that's the end of it, and the market moves on instantly to something else. We fire missiles, they get knocked out of the air. We fire missiles, maybe they attack one of our naval ships. Whole game changes on you very, very fast. Don't know what to make of it. Will there be jets involved? Who knows what's going to be. If you got this, you're looking at a higher high and lower low. difficult to tell you there. Same thing in the euro, lower low, higher high. No trends in the dollar index or the euro currency is what I'm trying to say. Where you've had an uptrend at work has been in the British pound because the market has had the thrust up and it captured people on an outside day. Remember what I just said about an outside day? Here is an outside day down. The next day you take out that day's high, which is rare. Go on your charts and take a look. If that occurs, often it leads to price making a run at the upper Bollinger Band if there's no key moving average above the market, which in this case there is not. Here's your second day. This was Monday, Tuesday. Now I don't care. You got close enough where ball game, you've got the point. In the end, this is still bearish. I was surprised today that we didn't get yen buying. Normally, if you're going to have a bad situation, a safe haven play is buying the yen. You're not getting it. You still have lower highs, lower lows. The market, in terms of the slow stochastic today, both numbers are under 20. Yesterday, they're under 20, not the day before. You're just in a very oversold situation. If tomorrow both numbers close under 20, then I think you're locking in a bear trend, and I'll call this a watershed event, a top possibly in this market. In Bitcoin, you have that embedded reading, which is bearish, until the red line closes over 20. Rallies in this market are being met with selling. And each time that is occurring, you're going to that lower Bollinger Band and bouncing away, which is exactly the theory of that. Now, we get over to this chart, and this is actually going to be Brent versus June WTI. So June Brent, June crude oil. You can see how you got up to 560, backing off a little bit at this point. There is a number here that we have to watch. Yesterday, the EIA said that they see the spread staying between $4 and $5 for a very long time out. That tells me what I was telling those of you that were with us that have been watching me for a while. I was trying to figure out when the spread got out into the sixes, actually, on a pullback, where would the support be? It turned out to be around 315, as you can see right here. That probably represents what shipping from the U.S. to Asia represents. So beyond that, you've got this play of potential profit of buying buying WTI instead of Brent and getting it in your hands. Here's the Brent. It's running at the upper Bollinger Band. Hard to say anything more than energy is overdone. If the situation in Syria turns into something that gets out of control, there is no number. Is it $80? Who the heck knows? If it's under control, I view this market as overbought at the upper Bollinger Band, ready to give a correction. I'm going to say the same thing of WTI crude. No, I'm not bearish. Not at all. What I am saying is the markets could be ahead of themselves, and I certainly have no way of telling you how to play this situation with Syria. Look at gasoline, higher lows, higher highs. Gasoline is one of these markets that when we were down here, I said, start looking for gasoline to have a low. Because as you go into spring driving and then summer, this market doesn't wait for that. Prices start moving up ahead of time. We have probably seen the lows of this market on this break right through here, and I'd be looking for higher prices through the driving season. Nat gas, look at the Bollinger Band. Look at how the market stops at it. You rally back to that resistance point and stay down there. If you're new to this, you'll find out that at 4:45, which just happened, the markets clear the boards because we're going into tomorrow's trade. That's the trade already going to start for the next day. If you haven't seen me before and haven't tried my research, I think you should give it a try. It starts off at 8:30 in the morning. I record 40 charts, live quotes as they're all going. I'm not in that video. I take it from my computer screen, put it out for you, and I'm throwing out everything I know at that point. Then after that, I start my writing and my research. By 11:30 in the morning, you're getting a newsletter from me, and it's a capsule. Everything going on for the day and what the market's looking for in the afternoon. And then at 8 at night, I put out another update with all the ideas, which I've already written most of it, for the trade for the morning and what the trade is looking for and any government numbers that are coming out and the like. It'll look like that. And I do put out specific buy and sell recommendations, but I have three different types of research. One of them has no buy and sell recommendation. The cost $240 a year. You're not going to beat that, $20 a month. It's got everything but buy here, sell there. Some people don't want that. They want the quick capsule. They want to hear a trader's point of view on the market, what they're seeing. And I think I do a real good job of that. The other traders want to get into and see the trade recommendations, what they are. That runs $60 a month, $720 a year. So quite a bit of difference, but quite a bit more information. How do you get a free trial to try it? Well, that's the beauty. All you need to do is call us at 866-973-2077. Go to our website at www.iraepstein.com or click right here. I got my finger up if you're watching me on YouTube, and that's how you get in. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.